Hi everybody, this is Ospreyeye from MyChartCoach.com, and we're going to take a look at some more of the tickers symbols that ended in play on Friday. Okay, first up, let's take a look at ASNA. Okay, this is a retailer here that closed up 21% on Friday. Okay, the bullish move on this chart was the close above the bottom of the gap and the middle Bollinger Band. Okay, so notice that there was this gap formed between this candle here on the 17th, the low of day on the 17th, and then high of day on the 18th. Okay, when the share price opened below this, this created a gap, and then the share price traded below this level and has traded sideways for many days, and then on Friday it finally closed above the bottom of the gap level, which is a huge resistance level to break. And it also closed above the middle Bollinger Band for the first time since the big drop. So currently this 209 level is the key level to hold. As long as that holds, there should be a new uptrend starting. And then our target's going to be up here, the top of the gap at 280. So we'll be looking for a gap fill if support holds. If the share price pulls back below 209 and closes below that level, then it'll be a signal that it's not quite ready to head higher, and it could signal more consolidation. So in order for this to be a good play next week, we want it to stay above the middle Bollinger Band and above the bottom of the gap. Okay, there was a PSAR bull flip. The green dots are now below the candles. That's a signal that there's a possible bullish change in trend. That is also being confirmed by MACD. Notice there's a bullish crossover on both time frames. So those are all signals that there's a possible trend reversal. Also, this move on Friday was on a bullish volume spike. Notice there was good volume behind the move. That's always a good sign. You always like to see volume when a share price is breaking resistance. And keep in mind, if it does break above the top of the gap, then we're going to be looking at the 50-day simple moving average at 317 as a target to the upside. First things first, we'd like to see this gap fill and support hold. Notice how plus DI here, the green line is angled upward, and then minus DI is angled downward. If the green line crosses the red line to the upside, that'll be another signal that the bulls have taken control. We've got Fasto now above 80 and in the overbought power zone. The thing to keep an eye on next week is RSI. It's currently at 43. Notice how back here multiple times it failed to break 50. If you see a break above 50 and it closes above that level, that'll be a signal that the chart is really strong, and there should be more upside potential. Okay, so keep an eye on ASNA for next week. Okay, so now take a look at AMPE. This is a stock that ended up filling the gap. It had this gap down over here, and this is an unfilled gap up here between it looks like 74 or so, 75 and 72. And then what happened was the share price pulled all the way back, and then on Friday, notice that this red line, it closed below this red line, it hit the red line. That was a previous gap from back here in April between this high on the last trading day in April and the low of day on the first trading day in May. There was a gap up open that day. Well, the share price came back and it finally filled that gap here on Friday. So many times when a downward gap fills, that many times triggers a bounce. So just like when a gap fills to the upside, it triggers a top. It's an inverse for the many times for the opposite. When a share price comes down and it fills the gap to the downside, many times you'll see a bounce, and that's what we're going to be looking for here for next week. Notice there's been multiple red candles in a row, and the candles have been riding EMA4 resistance lower, currently at 60. What we'd like to see is this 54 level hold. That could be a potential good reload target between 50 and 52. Notice that was the low back here. That level held before. If it does hold, and what you'll be looking for is a close above EMA4. If there's a close above that level, that'll be a signal that the chart is heating up, and we could see a run back up to the EMA8 or so. And so, yeah, it's always going to be a risk to jump in before there's a break above EMA4. So, it's always best to make sure that it's going to be closing above that level for the day. Anytime a stock is forming candles below EMA4 on the daily chart, it is a risk to hold. As you can see, they'll keep riding EMA4 resistance lower, and then then you could play in between EMA4 and EMA8. If it closes above EMA8, that continues the run. Possibly, if that level turns into support, you just have to take it one step at a time. And notice that EMA 8 is lined up here with the previous top of this gap. And so, yeah, that'll be another resistance level to get through. So keep an eye on it for a bounce next week. That'll be a technical gap fill bounce play. And so speaking of gaps, here's another play, CYTR. It filled the gap as well on Friday. As you can see here, there was a gap between high of day on the 7th and low of day on the 8th. And then on Friday, this lower wick came down and filled the gap. And so it looks like this gap has filled here. And so what we'll be looking for now that the gap is filled, and there was a close back above the 50-day simple moving average, currently at 0.55, we want to see that level hold. If it breaks, you could see a drop down here to the 100-day simple moving average and the 200-day simple moving average. 48 will be the big support level to hold if it does drop. And so we want to see it, though, stay above the 50, and then we want to see a close above EMA 4 here, 4, 8, and 13. EMA 13 right now is the top moving average at, where's it at? 62. And so if we can get above 62, it could possibly run back up to the bottom of this gap at 72. And so that's going to be the trade between 62 and 72 if it can close above that level. Now, if it breaks down further on Monday and it closes it below the 50-day simple moving average, be looking for the 100 and 200 as a big support zone. You know, it'll be big downside risk if it fails to hold those levels, because there is another gap on the chart. If you look back here down to 46, there is a gap between these two candles here. So there's lots of gaps on this chart, and see, the problem with gaps is gaps tend to get filled in penny land, and so they become targets for the market makers to pull the share price back to. Since we know they're targets, they can also become reload zones. So notice how there's a gap here between the 17th and 18th. If the share price pulls back and it fails to stay above the 50, you might want to wait and see if this gap fills down at 46. That might be an interesting reload level for a technical bounce play. You know, it would be better for the bulls, I know, and everyone, if it stays above the middle Bollinger Band at 59. It needs to hold that level in order to keep the uptrend going. If it closes again below the middle Bollinger Band, that's a signal that a possible new downtrend could begin. So that will not be good for the bulls. That would be good for the bears. Notice that, you know, we talk a lot about bullish crossovers. Well, here's two examples of bearish crossovers. Notice how the MACD line crossed the signal line to the downside. The crossover is a signal that the chart is breaking down when that happens. And then, and then there was also a PSAR bear flip. Notice how the dots flipped above the candles. That was another signal the chart was breaking down. So just something to keep in mind on. Fasto is at overbought levels at 19. And what bulls would like to see is RSI at 48 get back above 50. Okay, take a look at the 15-minute CYTR chart, and you can see here it closed on Friday above the middle Bollinger Band, and so it was heating up on Friday. That's why we're talking about it today. It had the gap fill and then a close above the middle Bollinger Band, and then you've got the PSAR bull flip. What we want to see is a break above the 50 simple moving average at 583. If it breaks above that level on Monday, that'll be a signal that it is in play. So 583 is the magic number. It breaks above that, it's in play. It could run all the way back up here in the 60s. You know, you could see a potential big run. If it can get past 60 here, you know, you could be seeing a run all the way up here to 64. But first things first, if it fails to break the 50 simple moving average, it's going to test this middle Bollinger Band currently at 556, and that is the big level to hold. If that breaks, that's going to signal continuation of this previous downtrend. So bulls, you do not want to see a break below 55. There was a volume spike to close the day, and there were MACD bullish crossovers. So there were all the technical signals that the 15-minute chart was heating up. Now it just has to follow through. Okay, let's look at CANN. This is a marijuana sector stock, General Cannabis Corporation over-the-counter play. It's now above oversold levels on RSI and Fasto. It had a crossover here on ADX. You know, this is signaling that the bulls are starting to heat up. This is a dead cat bounce play. You know, it was pulling back, riding the EMA 4 resistance lower, and then it finally closed above on Friday. There is an unfilled gap between the high of day on Thursday and low of day on Friday. Keep an eye on it for a break above EMA 8, currently at 137. If it can get above that, you know, it might run all the way back up here to the middle Bollinger Band at 164. Okay, we've been you know, tracking the marijuana sector. It's been you know, it's trying to find support here, and we're going to see if if it can get moving. There's a lot of stocks that are starting to bounce, and so if you'd like to follow along, please check us out on our website. We try to cover the stocks on a regular basis. If you look here, here's FRZT. Okay, now this is a stock that you know, it's another over-the-counter stock that made a really monster move here. You know, from 0005 down here, or even lower, all the way up to 0.009. And so it was a giant winner, and then it pulled back and it formed this long upper wick on Thursday. And many times when you see that, that's like dilution, profit taking. A lot of times the share price will pull back after that, but the share price ran higher on Friday, and so that was a really bullish move. And so sometimes when you see that happen, when it pulls back like that, and then you see a bullish move the next day, it was people loading. They pulled it back. There was big loading going on, and then now they're trying to push the share price higher. When a stock is breaking out like this is you know, a 52-week high close for FRZT, and notice how there's giant volume behind the move. What you need to do is you need to look at a longer time frame. So take a look at the weekly chart. And you can see the weekly close right here was the highest close since all the way back here, where it closed at 0.08. So going on next week, bulls want to see a close above 0.08. If that happens, that'll be very bullish signal, and it could run up here much higher up into Pennyland. Then Pennyland would be on deck, possibly 0.015. You know, that would signal the big move higher if it can close above 0.08 for the week. Notice that this was the biggest weekly volume ever for the stock, and then notice the big volume a few weeks back. Notice that big volume bar, and then notice how it was trading low down here, and then it pulled back and it traded sideways. What we call that's the front load. That was all the people that loaded that had a good idea that this was going to break out higher coming out. So you know, you've got the front load, the breakout higher, the really strong close. This has a good chance to break out higher. We just have to see if it can break resistance. If you take a look at the monthly chart, now this is like you know, maybe 5-year monthly chart here, I believe, and what this is telling you is that you know, if this breaks a penny, notice this is the high close here, that you know, 0.8, close to that 0.8 range. This looks more like 0.009. If it can break above a penny and close above that, then you can see where there's you know, big potential upside on the monthly chart. So notice how this is the biggest monthly volume in the history of the company. You know, there's big moves going on. It's got a lot of social media coverage going on right now, so you know, it's getting pumped pretty hard. So it's got the exposure, so we'll see how far they're going to take it. Keep an eye on this 15-minute chart here. This is a 5-day 15-minute chart, and notice how, you know, 0.008, a little bit above, is the key level to break. It needs to close above this level right here to break out higher. If it fails to break that level on Monday, then it could pull back. For these stock score plays that don't have the charts on stockcharts.com, you know, we like to ride EMA 4 and 8 support higher, and then when it breaks down like this candle right here, we like to exit and then try to look for a reload on the break back above. And so you know, it's always there. These OTC plays are always going to be a risk to hold when they're forming candles below EMAs 4 and 8, and that's the pink and the purple lines on this chart. Okay, well, thank you very much for viewing this chart. Thank you very much for viewing this video. Please check us out at mychartcoach.com, or our YouTube channel at mychartcoach.com for more videos and technical analysis. Okay, thank you.